Good morning, everyone. This is Dr. Shaun Tanger here to talk with you about tax implications of storm damaged timber once again. And today we'll be talking about a special topic, specifically net operating losses and how that applies to timberland owners. Below you can see my contact information where you can reach me in regards to the presentation or other timber tax questions you may have. And as usual, point you to the disclaimer at the bottom. This is strictly for educational purposes. You will definitely, in this case especially, you will need to contact a tax attorney and or certified public accountant because dealing with net operating losses, whether you're a business or otherwise, can be quite complex in terms of the proper filing and considerations that you need to take into account. So we had spoken last time broadly about the tax implications of storm damaged timber. And the category that we refer to whenever we have that are what we would call casualty losses. So if you have a sudden, unexpected, and unusual event, that's the parlance for the tax code as it relates to casualty. We're really describing events such as hurricanes, or earthquakes, fires, tornado. Straight line winds could also be included in that, which there's a little bit of a divider there for straight line winds and tornadoes. And while this is a catastrophic event, right, because you're not in the business of growing trees to lose the trees before you can harvest them, there are deductions that you can take to mitigate, minimize, whatever term you'd like to use there, in terms of deductions that you can take on your federal income taxes to offset those losses using the tax code to your advantage. So why do I want to talk about net operating losses? Well, I got an email from a landowner and it had a really unique question and one I hadn't fielded before. So it kind of led to me diving down the rabbit hole to learn a little more about this stuff. And it turns out that net operating losses can be utilized for landowners, for forest landowners, regardless of what their classification is. And remember, typically we classify forest landowners as being classified as a business owner, an investor, or a hobbyist owner. And you want to also consider personal ownership as well. Now, the difference between hobbyist and personal, it's as far as the tax code is concerned, not very much difference. But typically a hobbyist would be somebody who owned a tract of timberland just like an investor or a business, but didn't do so with the prime objective of financial gain. The personal landowner, when we talk about as it pertains to timberland owners, we're talking more so about the landscape trees that you might have in the yard at your house, something of that nature. So what is a net operating loss? Well, if your deductions for the year are more than your income for that year, you may qualify for a net operating loss. And typically, right, these would be more appropriate for a business owner because especially when you're just starting out a business, typically the losses in those first couple of years do outweigh any income that you might receive from that business. And so it's a way for people to get a business off the ground. Now, typically, the NOL year is the year in which it occurs, and you can use that net operating loss by deducting it from your income in another year or years. So you don't just have to apply the net operating loss to the year in which that net operating loss takes place. Now, the reason I mention that this is applicable to all forest landowners and not just businesses is if you turn your attention to that IRS Pub 515 under casualty, disaster, and theft loss, you don't have to be in a business or classified as a business owner, right, where you meet the thresholds for the hours test to have a net operating loss. And specifically, this occurs when you have a casualty, okay? So net operating loss from a casualty. This can occur when a person has a large casualty loss. So the landowner example I mentioned earlier, he had just inherited the timber, I believe in 2015. He was classified as an investor. and the timber wipeout that he faced, I mean, it was total devastation. And he informed us that it indeed was going to be more than 1 year's worth of income. Now, the reason that this is important for a casualty is typically, they always say in the, I shouldn't use the word typically, generally, whenever you see that word generally in the tax code, it usually means there's exceptions. And when it comes to casualty losses in the tax code, they say basically that generally, if you want to deduct a casualty loss, it has to be done in the year that it occurs. Now, when you have a presidentially declared disaster, then that's a little more flexible. You can take it in the prior year as opposed to the year that it occurs. So they say generally that's the case. Well, when would it not be generally? Well, here we are with one of those specific cases. And so this landowner has losses that are greater than an entire year's worth of income for him. And in his, from our discussions, greater than 2 years. So if you had a loss of such magnitude, how would you be able to recoup some of those losses under the tax code just using the casualty loss? And the terrible answer is you wouldn't be able to. So this net operating loss provision with respect to casualties allow us to then take advantage of added years, which we can deduct this net operating loss across time as opposed to just in one single year. Okay, so I wanted to mention one other thing. If you are not a business owner, then you follow the same rules that non-corporate taxpayers, such as sole proprietors, follow when declaring a net operating loss from a casualty. And so, as it says there in the text, when is this likely? Well, if you didn't have insurance on a property, and most forest landowners don't carry insurance because it's cost prohibitive, as I mentioned in the prior presentation. If you didn't have adequate insurance, then you would potentially have a very large casualty loss, especially if it wiped out the entire property. So in that case, you're going to exceed your income for that year if the property is large enough and your income is low enough. So if you are a non-corporate taxpayer, and you can see the categories there that they're describing, when you calculate your net operating loss, you must exclude a number of deductions you may have taken on your individual tax return. Okay, so you can't add these things in to the calculation. For example, when calculating the net operating loss, you can't include net capital losses. Okay, so if you have the amount of your capital losses or more than your capital gains, typically that would be for stocks. There are specific cases where real property would also qualify, but they're not as common. Net operating loss deductions from prior years, any pass-through tax deductions, and non-business deductions that exceed non-business income, including itemized deductions or the standard deduction if you didn't itemize. Now, when you are calculating net operating loss, you can include itemized deductions for casualty and theft losses. Okay, so the casualty does qualify to add to the net operating loss number. And also the deduction of half your self-employment tax, which is an important one for forest landowners, strictly the businesses in that case. So again, to reiterate, to have a net operating loss, you can see the different deductions that you need to qualify for. And we're focused specifically on this one. If you were a timber business, you could also qualify for a net operating loss under this category. But since we're talking about casualty losses specifically, this particular provision applies for all forest landowners, again, as I mentioned, regardless of the status of their tax return being a business, trade, or an investor or a personal / hobbyist. Okay, so there's been quite a few changes very recently with respect to net operating losses. So most taxpayers can only carry net operating losses arising from tax years ending after 2017 to a later date. We'll see a graph in a minute that shows the differences from prior to the Tax Cut and Jobs Act, and then now with the COVID-19 tax changes, there's been another a reset to those as well. But typically, before the COVID-19 tax provisions were implemented, farmers did have an exception, and that was just to say that while most taxpayers couldn't do carrybacks anymore, farmers still were able to do, I believe it's 2 years. So it gave farmers a little more flexibility. As you know, farming income can be quite variable from one year to the next, and losses in a particular year are quite common. So the TCJA, Tax Cut and Jobs Act of 2018, eliminated the net operating loss carrybacks for certain years, again, after 2017. And while there could still be carried forward indefinitely, it was limited to 80% of the taxable income for that particular period, so for that year. Now, with the COVID-19 outbreak, as you know, or as you may know, the federal legislators passed the CARES Act, and it has tax implications broadly for forest businesses and non-businesses, but also with particular respect to net operating losses. So we can see here under the CARES Act, a net operating loss arising in a tax year beginning in 2018, 19, or 20 can now be carried back for 5 years. Okay, so they added 3 more. Well, if you're not a farmer, they added 5. If you're a farmer, you would be able to add even 3 more to that to fully offset that income. And also, the 80% limitation that I mentioned is removed for tax years beginning before January 1st, 2021, as of that CARES Act legislation. Okay. So if you're a business, this could be really advantageous because you can see here, prior to 2018, the corporate taxpayers had a much higher marginal rate than they did afterwards. This could also apply to individuals and small businesses, depending on, you might have improved your bracket a bit, but even if not, if you had, extreme, had really good income in certain years and not so much in others, then you can spread those losses back and backward in order to get an amended return for that year where you may have had to pay tax now for that particular tax year because you've able to carry this net operating loss that you'll have this year backward. Then you could actually get an amended return and get a refund potentially, hopefully, right? That's what we're wanting. A taxpayer entitled to carrybacks or is entitled to do the carrybacks on its NOLs can instead elect to waive the carryback period for a net operating loss. So you have to take the loss, carry it back to the earliest year possible from these new rules. So if you're declaring a loss in 2020, then you'd have to go back to 2015. But you may not want to go back to 2015 if you're a forest landowner, right, with respect to these NOLs in regards to the casualty loss. Well, you can actually waive that rule and only carry them back 4 years if you want. So you would essentially waive that period as you chose, but once you make that election on the carryback period, it's irrevocable. So you'll need to work with your tax person to make sure, hey, do I need to go back to 2015 if it occurred in 2020 or 2019, back to 2014, or do I need to start at, say, 2017? Well, it loses you some years, right? You don't get to add it to those other years of income, but you're not forced to go back to 2015 if you don't want to. So that again is another form of flexibility that they've pushed into the law. You can see here comparisons of the rules for net operating losses. So both prior to the TCJA, during, and then with the CARES Act. The carry forwards prior to the TCJA were 20 years. Now they're unlimited, and that's going to stay in effect at least until the Tax Cut and Jobs Act expires, and that would be for, I believe, in 2026. For carrybacks, before it was 2 taxable years. Then the TCJA disallowed them entirely, except for farmers. They had 2 years. Now, if those occur in 18, 19, or 20, everybody gets to carry them back 5 And again, you can see here with the taxable income limitation, they had reduced it down to 80% from 100. That's now been removed as well. But after 2020, that 80% deduction limit will kick back in. So personal casualty losses. If you are a hobbyist or a personal landowner, meaning you have a landscape tree at your home, for instance, there's a little bit of a complication. It looks from the tax code, if you have a casualty that occurs, and you want to claim a net operating loss on it, you would have to, the casualty would have to be attributable to a federally declared disaster. So if a hurricane or if a tornado ripped through your county, but they didn't declare it a presidential or federally declared disaster, then you would not qualify for that casualty for hobbyists and for personal landowners. Okay, they would have to qualify under that federally declared disaster provision. Okay. Such personal casualty losses that are allowed after 2017 remain subject to Section 165 limits described above for personal casualty losses. And this is just referring to, as we'll see on another slide, this is referring to the provision of each casualty having to be greater than $100, and the overall casualty loss from a presidentially declared disaster or federally declared has to be greater than 10% adjusted gross income. Okay. However, an exception to this rule applies if the taxpayer has personal casualty gains. Okay. In this case, the taxpayer may deduct personal casualty losses that are not attributable to federally declared disaster to the extent that they have personal casualty gains from that event. So let's clarify here. So I want to take a net operating loss because I had losses greater than my income for the year. Okay. So for hobbyist or for personal property owner, that's only going to be possible if I have a presidentially declared disaster and I have these two restrictions, right? Greater than 10% and $100, greater than $100 each casualty. Now, investors don't have to have a presidentially declared disaster. They can have a net operating loss stemming from a casualty. But because we have, as investors, we have to file casualties under miscellaneous itemized deductions. That would mean if you wanted to take a net operating or declare for a casualty to trigger a net operating loss, you would have to forego the standard deduction that you would have as an investor. And remember, we talked about before, you get to include those deductions, but not for an investor. Okay, so that's a limitation there because of the Tax Cut and Jobs Act rules changed that. It used to be the casualty didn't have to be filed under the miscellaneous itemized deductions, at least it didn't trigger you foregoing your standard deduction. Now it does, and so because it does, you no longer can take that standard deduction and subtract it, as we mentioned before, to help offset that or to help increase that net operating loss. Let's find that in here. Where were we? Yeah, see here, the net operating loss calculation does include itemized deductions for casualty and theft losses. But that would not apply for investors because we have that built-in limitation there. Okay, and then for businesses, you would be able to take, you would have none of those restrictions that I mentioned for these previous two categories. Okay, finishing up, you in order to have a casualty, you have to calculate the smaller of the fair market value loss of the property or the basis or adjusted basis that you have in your timber account. Now, if you have destruction on your property that is complete and total, then the fair market value loss is most likely going to be larger than your basis. That one landowner that I mentioned earlier, his question, he had inherited the property in 2015, so his basis is only a couple years old, and it's for several hundred acres. It's going to be very large, but it's likely not going to be as large as the fair market value loss in the timber. Although that's debatable. Okay, the take-home point is if you don't have basis in your account, meaning so let's say your basis was zero. Well, which of these two would be lesser? Well, if you had damage, obviously it'd be larger than zero. Well, according to the IRS, if you don't have basis, then you don't have a casualty loss. So you really need to know what your basis is and what the fair market value loss is. So for this particular example, I really recommend to people, if you're going to try to get a net operating loss triggered from a casualty, you need to have several things kind of working in your favor. A, you don't need to have much adjusted gross income. Okay. B, you need to have a lot of basis, and the destruction on the property needs to be pretty large. Okay. And so that way, even if it's the lesser of one of these, they're both going to be quite substantial. Okay. So if you want to see more about the broad topic of casualty loss and the tax implications for storm damaged timber, you can find that video on our Facebook Extension Forestry page. And if you want, you can also email me and I can send you a copy of it, although it's a big file, so it might be easier to go to Facebook. But if you don't use Facebook, we can get you a copy of it one way or the other. There's also some references on the Mississippi State Forestry Extension webpage. You can see that are relevant to this discussion, not necessarily to net operating losses. We're really talking about a very, very specific case here, but more broad type questions if you're interested. Okay, so that's all I have for today. I will be back next time to talk about another special topic. We'll discuss replacement property and how that needs to be considered with respect to reforestation efforts and deductions. But again, if you want to talk to me about this or other timber tax topics, excuse me, there's my contact info. And once again, I'm not a CPA, so you need to make sure to contact one, especially on an issue as complex as this, to see what steps you need to take and those sort of things. So make sure to consult those professionals. And with respect to me, I can at least point you to the things you need to be asking them and the possibilities that you could help trigger for net operating losses if you have a large enough casualty event on your property. And with that, I will end the presentation and hope you enjoyed it. And please reach out to me at any time. All right. Thank you very much. Have a nice day.